Hello, I'm Andrew Thake. I'm from Minds and Money, and I'm with Julian Treger, CEO of Anglo Pacific. How has 2020 been for you, Julian?
Well, I think, Andrew, it's been a complicated year for all of us. It's had opportunities, but there's also been pitfalls. I think we avoided the biggest pitfall, which was shutdowns from COVID in our operating mines. But the price of commodities, particularly bulk commodities, has seesawed around. We've had some slower quarters than we expected in Q2, Q3. But the year end should be strong, and we are seeing lots of signs of optimism for the year ahead.
Mm-hmm. You talked about that you managed the pandemic well and that your Q2 and Q3 results were better than expected. What was the secret to your success?
Well, I think it was having a diversified portfolio in countries which put mining as a priority, and therefore there weren't shutdowns. People navigated their way through it. But obviously commodity prices did drop in certain areas. Now we think commodity prices are recovering because of the creation of, a lot of new money through quantitative easing. We've seen gold go up, and we expect industrial metals and minerals to follow behind.
Mm-hmm. And looking forward to 2021, what key milestones can investors expect from Anglo Pacific?
Well, it's been quite frustrating that we haven't executed on more transactions in 2020. I think a lot of people were a bit surprised by the beginning of the COVID pandemic, and it took them a while to decide how they were going to move forward. That's really picked up pace in the last quarter. So we are actually super optimistic about executing on a number of transactions as we pivot away from our sort of bulk materials heritage towards more battery metals. And so we would expect to see a series of new transactions which transform the company in 2021.
Within the battery metal space, is there any particular commodities that you're looking at sort of more keenly than others? Because obviously battery metals can mean lithium, it can mean cobalt, it can mean copper, it can mean nickel, it can mean graphite. Are there any particular areas that you're sort of focusing on?
Well, I think we tend to be sort of value investors. The best way to make money in the mining sector, in our sector, is to have a low entry price. So clearly lithium and cobalt have come back a lot, and they are areas which we are focused on. We also don't think that copper is nearly as toppy as it might be, but there are some other commodities like nickel, which have taken off a lot recently, which are more difficult to enter cheaply. So it is all a matter of, within that complex, trying to identify what's a good entry point.
Mm-hmm. Turning to the big topic of this year, which is ESG, you've been an early advocate of ESG since I've known you, Julian. Where is the industry succeeding on ESG, and where is it still falling short?
I think the industry is making progress, but unfortunately, culturally, it seems to be reluctantly. And I think the culture is still to sort of be dragged along rather than to love and embrace the change. I'm always one who believes that change is a good thing. And I think our industry should be absolutely on top of it, leading it, because I think it's a great opportunity for our industry to shift from being effectively seen as part of the past to being part of the future, from a sort of 19th century industry origin to something which is so important in the 21st century. And I think the signs that we see from Tesla, buying its own mine, asking for cleaner nickel, to the US government starting to invest in projects like our Brazilian nickel project directly, these are all very important signs for the future of our industry. And I think if we are on the curve, ahead of the curve on an ESG perspective, we'll be perceived as such by the general investing public. At the moment, specialists understand it, but it's not generally widely known. Our sector is part of the future.
When you talk to your investors, what are they specifically saying to you about ESG? What do they want to sort of see Anglo Pacific doing?
Well, I think the move away from coal, not investing into thermal coal, unlikely to do any met coal, and the shift towards battery metals, I think, is clearly part of assisting the transformation, but also ramping up our standards, the questions we ask our counterparties, the policing we do of them is clearly more and more important. We've established a while ago a sustainability committee. We are just being much more detailed and on top of it. And as you may know, Andrew, I'm also spearheading the beginning of a global streaming and royalty council, and equally there, ESG is a major consideration.
Just with regards to that royalty and streaming council that you're spearheading, what specific initiatives are they undertaking in order to drive forward ESG?
Well, I think there are a lot of initiatives that we as a sector can be adopting in terms of standards which we apply to our counterparties, standardized sort of questionnaires. The thought is that effectively, as a financier of the sector, like the banks, we have a lot of power to require reporting, but also behavioral modifications to ensure much higher standards. So that is part of it, as well as obviously promoting the general mainstream acceptance of the sector and addressing some of the issues which the sector faces in terms of its perception.
Mm-hmm. You've mentioned standards quite a few times. It seems to me that there's a plethora of ESG standards. There's also a plethora of ESG ratings as well at the moment. What approach is Anglo Pacific taking?
Well, I think over time, those standards are going to standardize and, become more narrowed down. But at the end of the day, it's all about common sense. I mean, we're not so much concerned about box ticking as making sure that we are as good as possible on the E, on the S, and on the G, and that we are part of the movement to go to, zero emissions, not only in a scope 1, but also scope 2 and scope 3 basis. And that's really the big picture which we are focused on. So it is reporting, but it's really making sure that we are not exposed to cock-ups and blow-ups, which have bedeviled some of the other companies in the sector recently. Making sure that we have close relationships with our counterparties, and they understand where we're coming from and the way in which we could be an asset to them in promoting their ESG standards.
Mm-hmm. And which and just kind of going back to your investor base, is it like all of your investors are now always asking you about your ESG when they are talking to you, or is it just more generalist investors than natural resource investors? Are you seeing these sort of like sea changes or shifts there?
No, I mean, I think, we're very explicit about our ESG strategy. So it's become part and parcel of every presentation we make. But the investor base, is changing, but not as rapidly as you would think. I mean, there still are some investors who encourage us to, invest more in coal because there's great returns to be made there. And we obviously say that that's not something we are prepared to do. So there is still a range of thinking amongst investors. It's not all groupthink, but clearly ESG has become more and more important. And so, we're doing a lot on that front. Also, within our head offices, measuring our, carbon footprints, etc. as well. It's not only with the counterparties; it's also what you can do yourself.
Mm-hmm. Changing subject to the leadership of the mining industry. I know that one thing that you and I have talked passionately about is about the mining industry and its need to change its brand image. If there was a global mining industry association and you were the CEO, what would you be telling your members?
I'd be telling the members that we're facing a moment when there is enormous disruption in our sector. As I said, the sector is changing from, in my view, if it's done correctly, from being part of the past to being essential to the future, from being a commoditized sector, which is, a sort of largely a boys-only club where commodities have the same pricing, to business to consumer sector, where consumers are ultimately the customers, and where commodities are going to be much less commoditized because each one will have a different carbon footprint. And so the sort of, price cost curves need to be rethought. The whole sector needs to rethink itself and reinvent itself for a new reality. And if the sector doesn't do it, then other people like Tesla will do it for them.
Mm-hmm. You talked about diversity there, and you talked about, the mining industry being a bit of a boys' own club. What can the mining industry do better to promote diversity?
Well, I think the sector has done some real steps on obviously increasing gender diversity, but I think the whole ethnic diversity piece has really fallen behind. And if you think about where the miners operate globally, I mean, that is really a stark contrast to the way it should be. So I think the whole complexion of mining companies needs to be changed quite quickly over the next couple of years in order for them to be relevant and, as I say, identifiable to the consumers, who are ultimately going to be more and more important in determining who wins and who loses.
Mm-hmm. How have you encouraged diversity at Anglo Pacific?
Well, we are, like a lot of the sector, we have quite a number of women in our team, and it's something we want to encourage further. But we do need to make more steps on ethnic diversity as well.
Sure. Okay. You mentioned Tesla a few times. I'm just kind of interested when we talk about the future leadership of the mining industry. I guess first of all is which CEO within the mining industry most inspires you, and the second question is which industry leader outside of the mining industry, if it's not Elon Musk, most inspires you?
Well, I think within the sector, I have great admiration for Robert Friedlander, who we know often appears at your conference, just in terms of his vision and breadth of imagination in terms of how the world is changing and his information. And I also take off my hat to some degree to Mark Cutifani, I think, who on a much more granular fashion has been thinking about innovation and greening of the business. But in terms of the broader community, I mean, I just think all the people in Silicon Valley are very interesting in the way in which they can reimagine the world, refinance the world, and be very ambitious. And I think our sector needs to be much more ambitious about what we can do and how we present ourselves as part of that picture, and be more like that whole sector, be more collaborative, be more open. So the culture of Silicon Valley is something I really do admire. And it's clearly been very successful. Whereas I think our sector is more about, trying to harbor rather than share. And we need to change that.
Will we see more sort of like integration in the industry, as we have seen with like Tesla's acquisition of a mining company? Will that become more commonplace in the future?
Well, I think there could be more vertical integration if the mining sector doesn't provide the appropriate materials to their customers. I mean, historically, in the past, there were experiments which didn't go well when Ford, for instance, got into, I think, platinum or palladium mining in the past. And mining is a very specialized business. It's not so easy to get into. It's not like creating widgets. It's very complicated. But if the sector doesn't produce the sort of green, responsible type of materials rapidly that the consumers are needing, then the supply chain will have no choice but to try and vertically integrate, I think.
Mm-hmm. Looking at behind you, I see a bookshelf with a lot of books on. I always like asking CEOs this question. If you were about to advise someone joining the mining industry, which 3 books would you advise that they read and why?
Well, I mean, I'm not a technical miner, as you know.
Sure.
So I think important thing about mining is to know what's happening in the world. So the three books that I've read most recently, which I think are very interesting in that respect, are the Blood and Oil, which is all about the changes in Saudi Arabia, Putin's People, which explains how Russia has changed under Vladimir Putin, and is it called Kleptocracy, which is all about the way in which clean and dirty money is washing around the world, and obviously relevant to our sector.
Mm-hmm. And another question I'm always interested in asking CEOs as well is, what was the worst mistake you've made in your career, and what did you learn from it?
Well, the whole thing about making mistakes, and I make mistakes all the time, is try and make them less than the other people. I think the thing that I'm most bad about is, selling. I'm very good at seeing opportunities and buying them, but working out when to sell them isn't always my greatest strength. But I mean, one of the mistakes I made, I recall before I was in the mining sector, is when I was given by the guy I was working for an opportunity to look at an investment, and he gave me a couple of packets of coffee, and I looked at this and thought, this doesn't really make any sense to me. And it was what is that large coffee brand, the chain, this huge one?
Yeah.
No, the global one, whatever. The
Starbucks or whatever, yeah.
Starbucks, yeah, it was Starbucks. So that's something I haven't forgotten.
And then just perhaps maybe one sort of one or two final questions for you. I saw that, I think it was I saw in an article last week that you're now listed on the London Stock Exchange of 1,000 companies to inspire Britain. I'm just wondering as to how do you inspire your staff, and how do you how does Anglo Pacific inspire the industry?
Well, I think Anglo Pacific tries to inspire the staff by making us a team. Mm-hmm. Really, we're quite a small team. Everybody understands. We communicate, even through lockdown, all the time, on a daily basis with the team. Everybody's incentivized in a similar way, and the culture is one where it's not very formal. It's really about getting the job done and not FaceTime. And then I think in turn, Anglo Pacific can inspire the industry by being a thought leader. And obviously, in terms of the royalty and streaming space, we are the largest mining company doing that in the UK, and therefore we continually explain to investors and the general public the benefits, the virtues of our model, which I think hopefully inspires others to come to us with opportunities, and also think about how the model can become more mainstream.
Sure. And I think just as one closing question, if I was an investor and you were looking to sort of sell to me, what makes Anglo Pacific stand out from the other royalty and streaming companies out there? What would be your elevator pitch to me?
Well, I think, we are super cheap relative to every other royalty company around. In part, I think because we're listed here and people still don't appreciate the virtues of the royalty model. So I think, in terms of dividend yield, dividend cover, discount to net asset value, it is quite extraordinary. And how we address that will be a great opportunity for investors in the coming 12 months. But proof is in the pudding.
Well, many, many thanks for that. That's been a really great interview, Julian. That was Julian Treger, CEO, Anglo Pacific, with myself, Andrew Thake from Minds and Money.
Thank you, Andrew.